Hey, ladies and gentlemen, look up in the sky. It's a bird, it's a plane. No, it's me, the Einstein of Wall Street here. Infinite possibilities. Absolutely wild and crazy market. I mean, we are now, May 7, 8? Extraordinary. If we had talked, and we probably did talk 6 weeks ago, we were probably looking at a market that was down 12, 13%. Software trading, 50 cents on the dollar. Tech sector under a lot of pressure. Oil at $119 a barrel. Massive inflationary impact on extended periods of time, with oil above $110. Still in the midst of a wild and crazy confrontation, war, conflict, whatever you wanted to call it. And with the eye on the ball, like we talked February, March, and April of last year, you know what? I don't see this getting any better. I mean, maybe we should be selling it in advance of the fact that this may get a lot worse. And then, boom, what happened in 2025? Market completely turned around. President said, okay, nothing to see here. Let's buy the market. 4 weeks later, we were back to even, and we spent the rest of the year catching up. Well, I think that the market itself is suffering from PTSD because suddenly, 3-4 weeks ago, probably 3.5 weeks ago, we were trading in that same mode, not down 20, but surely down 10 or more. And the market looked really bad, and we were really at risk on so many levels. Correction mode on a lot of indices, in deep, deep trouble in so many different levels of anxiety and all that. And then suddenly, a week later, we are what? We are at S&P 7100. I mean, absolutely baffling. I'm here with my friend. This is the guy who's going to unwind the unwind. This is the man who gives us the DL on the DL. It is Tim Anderson. Welcome. What in God's name is going on? Please give me some input.
This is the peace dividend 30 years later. Okay, in the early 1990s,
right?
The Berlin Wall came down.
Okay.
The Soviet Union collapsed.
Okay.
And the market went through Dow Jones 3,000, 4,000. Everyone wanted to know what the top was. It just kept going and going and going. And it was the peace dividend because the Soviet Union was no longer, and Russia was no longer a potential global conflict or an adversary. They were selling all of their gold. Gold traded down by about 250, not 2,500, but $250.
Right. It wasn't
trading a buying opportunity of a lifetime.
Trading in the thousands, right?
Because they were bankrupt, and China wasn't a thing yet.
Right, nothing.
So it was a peace dividend. Peace was breaking out all over the world, and the market just loved it. So, what do we have going on right? What do we have going on right now?
Tell me.
If let's just say this Iran conflict gets resolved, and the IGRC, which is their military faction, which seems to have assumed control over the country, if they can be eliminated or muted, now we're not there yet because it is the hardliners still that are running the IRGC.
Correct. In the last few hours, some bumps back and forth. There. We are escalating.
China's going to put some pressure on them. We're going to put some pressure on them. But imagine the potential economic benefits to the whole world, not just the Middle East, not just the U.S., not just all of the countries that,
South
Europe.
America, Venezuela.
If Iran were to become a Western-friendly capitalist country
like
again.
it was in the 50s.
There's 90 million people in Iran. Correct. There were 80 million people there in the 1980s. It's gone up what? There should be 200 million people there, but nobody wants to. But the citizenry don't want to live there. They don't like life there. They are being taken advantage of for 40 years.
No question about it.
And
so a non-nuclear Iran and a viable economy that could really look. If you go back to the Shah, original
to the 50s,
Shah,
it was probably one of the top 5 or 6 economies on the planet.
It was where it was. It was like the Côte d'Azur of the Middle East. Right. They called it that. In Lebanon was where people went.
Beirut was the Paris of the Middle East.
Correct. Right? And Iran, look, you're talking about one of the most, it's the cradle of civilization. Let's think about it. We can go back. That was one of the first civilizations to exist. And over the years, they've peeked their heads out and shown that they are the ingenuity and the brains and the capabilities of the Iranian people and the economy there. Can be so much more, and that was probably why it was so oppressed, right? If we were to suddenly see a scenario where we have a non-nuclear Iran and a viable economic entity Iran, then there's no end to the in sight, right?
That's right. That's
oh my
right.
God, you answered that freaking question.
Okay.
And so you're telling me, did that realization happen 3 weeks ago? Because 3 weeks ago, you and I had a chat, it was probably maybe 4 weeks ago, where we were looking at a market that had eroded, the software down 50 cents on the dollar,
Yep.
tech being eviscerated, oil at 120. I mean, we were looking at a situation that was bad.
You also have this, all of a sudden, the investment world has like, somebody snapped their fingers 3 weeks ago, and that woke up to the reality that this power grid, what do you call it? All these plants that are being built for the
data centers.
Data centers. This data center. Thank you for that. This data center build out
it's not been changed. It's not changed.
Is in the. If the AI is in the third inning, this is in the first inning.
Right, we are right.
We're still in the mode of flattening the land, preparing the land, getting ready to put in plumbing and electrical foundations, and that this is going to go on for a couple of years. You don't build big buildings like this in a month.
You don't, and you don't build them with a short-term plan, right? You're building these things to be really to be the next
for 25 to 50 years.
Exactly.
This is
It's a revolution.
This is this generation's nuclear power plants.
Exactly.
Without any negative connotation to it, because you've got to have all sorts of infrastructure to go into these buildings to make them secure and operational, and a lot of the land that's available is in very warm climates, so you need tons of air conditioning capabilities and capacity.
Right.
And
are we seeing those companies that represent those things? Are they
Carrier, which used to be part of United Technologies, is
are
phenomenal.
They great? Really?
Teradyne, which is really a semiconductor testing company, in this whole idea that CPUs, we need CPUs, we need integrated CPUs that have all of these. The GPUs that have all of these semiconductors embedded in them, and all of a sudden Advanced Micro Devices goes up $100 in 3 days.
Incredible.
And SanDisk, which had been trading, and the storage capability that these data centers are going to require, all of a sudden somebody said, wait a second, what about the storage? What about the storage capabilities for these data centers? And SanDisk, which has already gone up from 250 to 700, goes from 700 to 1400. So, is it crazy? Yes, it's crazy, but it's not over
but it's
yet.
not over the top. It's not.
No.
Think about it because so many of these things got thrown out with the bathwater. So many of these things nobody was paying attention to them. The AI trade we knew was happening. We knew we were in the second and third inning of it, but nobody really broke down the components that make up that trade. Right. And when you start to do that. Right, Dan Ives always talk about it, the secondary and tertiary trades that are part of the grand scheme of data centers.
Right.
And that's, we go back to Jensen Huang in December, talking about energy being the either catalyst or impediment to the next wave of data centers. And he said, we're going to be looking at nuclear, solar and space, whatever it may be. And then you start talking about, so if they are actually building these things, and they are building out, and look, as you said, a building doesn't go up in a month, and we're not going to have to wait till the 5 years to start reaping the benefits economically.
The best performing stock in the Dow Jones Industrial Average year to date, Cat Tractor.
Cat Tractor.
Okay?
Builder.
You need heavy equipment. You need heavy equipment. You need you need heavy equipment to clear the land, to put the buildings together, to lift things in place, and it's maybe build some more roads to get to the land. It's just,
all encompassing.
It's all of the little tertiary. It's like home building. You need plumbers. You need
everything. You need air conditioners. You need plumbing. You need energy.
Framers.
You need heaters.
You need delis to serve the people food.
Exactly.
And that's why home building stocks as a sector are not a wildly big part of the S&P 500, but the home building industry is a wildly big part of the economy.
Right, but it's rare that you were to see that being at the cusp of a massive need for all of those products, because we haven't had that. Look, yes, there was the infrastructure bill,
right.
and yes, we've been talking about rebuilding America and all that kind of stuff,
yep.
but we haven't had that initiative follow through.
Right.
And now you're talking about, you know what, everybody wake up, because we're going to need all that stuff.
That's right. It's not like they're thinking about building data centers.
No. We're there. We're deep in.
We're all in.
We are all in.
And it's not going to happen like between now and the end of the year.
No,
it's going to go into 27 and probably into 28.
Yeah, into 30. And it will, absolutely. And we're talking data centers in space.
Right.
So, you know what? That is the best explanation that I have heard about it, why a market is trading at 7,400 on the S&P when literally 3 months ago it was trading at 6,400. Right? And a Dow that had gotten to 50,000 back down to 46.9 is now trading at 49.6. It's almost like it's got dyslexia.
Right. We're 1%. We're back to within 1% of the Dow 50,000. The S&P three and a half weeks ago
every day.
Went through a very stubborn resistance level of 7,000. Never looked back.
Never looked
and
back.
we're close to
71,
6%
2, 3,
higher than
4.
that right now.
Amazing. So, you know what? Look, I've been trying to figure out what it was that took it. And I sort of tried to, and my analysis was that people were, suffering from PTSD from last February, March, and April when the market sold off 20.8%. And then the president said, okay, there's nothing to see here. Let's buy the market. We bought the market. It was back to even in 4 weeks. And then we spent the rest of the year playing catch up, being underinvested. The big guys, right? Retail was the one that was buying the dip, not selling the dip.
Right.
Institutions were the ones going, whoa, I don't see where we're going to go here. This looks bad.
Right.
They were selling.
Right. They taught me in Economics 101 that tariffs were like going to destroy the world. So,
right, exactly.
It didn't really happen
there is a tariff. I want to ask you that because there is a tariff component to this rally, but we can talk about that in a minute. So my explanation was everybody did not want to get caught as they did last year, playing catch up for the rest of the year.
I think that is the unspoken truth of part of the market strength.
Yeah, 100%.
Yeah.
And they basically said 3 weeks ago, you know what? We are not getting any information. We're not getting any edge from the administration that's really something we can sink our teeth into relative to the war in Iran. We're getting we're hearing about the Straits of Hormuz. We got mining and bombings there. No, we don't. That's not true. We're going to take the boats through. No, we're not going to. None of the information we had, right, was giving us enough of an edge that we could trade.
It was a fog of war type.
Exactly.
Moment.
Yeah, and so none of the information was given that we could even trade off of.
Right.
So I think everybody said, you know what? At some point, economies and markets tend to disengage.
Yeah.
Right. When I'm not, when the information that's happening is not giving me an edge, I'm going to just step out on my own, make a shopping list, and decide what I want to do.
Right.
Because we know eventually this will be over. Right. We will get on the other side of this. We will be able to see the forest through the trees.
Right.
And at some point, we're going to be fine. Right. And it may be a week, a month, 3 months, not much more than that.
So now we've also had a very, very strong earnings season.
Yes.
Okay. And I think what you're starting to see a little bit of is some of these AI components or strategies or implementation of whatever you want to call it that end-using companies have put into their processes is starting to show up in earnings and significantly improved financials for some companies at the bottom line through AI and where I think you will start to see that also, and I've been talking about this for quite a while, and overall economic indicators is productivity. Companies are going to be able to operate a lot more productively.
Right.
And it doesn't mean that they're going to necessarily lay a lot of people off.
Right.
The job market numbers have been a little bit stronger than what people have anticipated the last couple of months, including this morning.
Right.
And you're just starting to see a trickle of companies showing strong earnings, and it's got to be from implementing AI into their processes
into the economy. So
and having it work
waking
to
up.
their bottom line.
I love it.
And I think you'll see more of that in the second half of the year when we get second quarter earnings and third quarter earnings.
Right.
So that's going on, and that's a positive thing, and it's also this capex spending that is involved in the data center build out, and is involved in the data center build out in terms of construction, and also the whole AI build out. This is being helped and pushed through this part of the tax reform from last year that allows immediate expensing, not accelerated depreciation like we had in the tax reform bill that was very revolutionary in 1986. But this is immediate expensing that encourages companies to spend on capex as much as you possibly can, because you'll be able to immediately expense it, and it will go right to your bottom line.
That's huge. Wow, that adds so much to the bottom line. That's amazing. So you know what? Look, I mean, ladies and gentlemen, I think everybody was caught off guard once again. As many times as Tim and I have seen this movie, I mean, we never cease to be surprised, because when you're in it, sometimes you cannot see the forest through the trees, and you're in it and you're just looking like, wow, I can't imagine what's going on in that administration's head and with the plans there and all that. But you know what? There is a somebody is seeing the vortex, and at this point, the vortex is falling in line, and it's really a matter of the data centers. It's a matter of the components of data centers. It's about productivity. It's about the tax expenditure. It's about probably a little bit of a short cover. It's surely about some PTSD from last year's playing catch up for the rest of the year. Think about it. We're in 2026. Never before have we seen more people involved in the market than now. You've got 50 million plus retailer traders. You've got institutions where they're receiving so much money. There's so much allotment of money going into 401ks
and they have to be invested.
Mutual funds. It has to be invested. They do not want to get caught off guard and underinvested as last year. And so that's what we've seen. We've seen a massive surge. I believe that we went from the most oversold situation in history to the most overbought situation, the fastest that's ever happened in stock market history, right? And over the last month.
Yeah.
Amazing.
Okay.
So you know what? Now we got it. Tim gave us the down low. Now we come. You know what? We really don't need to say anymore. I could go on and on about this, but at the end of the day, we have just gotten the most succinct, the best explanation of why the market is trading 49.6 on the Dow. Russell's up here at, up 2,600 and change, and the SPY's almost trading at 7,400. You're talking, the sky's the limit. The sky is the limit. Productivity is here. Data centers are the way to go. Money, capex spending is on the rise. Nothing has changed. All those stocks that sold off to 50 cents on the dollar in a market that sold off 11 and 12%, quietly eroding its value. None of the stories ever really changed. It was more of a baby thrown out with the bathwater situation than actually that we were kicking the ball down the road with data centers. That never changed. The capex allotment was never changed. The components that were necessary to make this thing happen never changed. It was that mentality of the market going, oh my God, something's wrong here. We're in the middle of a war. This is going to be bad, until we were able to separate ourselves emotionally. Go back to the original Wall Street movie. Gordon, never get emotional about money. I think that's the name of the game. Tim, you really broke it down for me. Now I friggin' understand it for the first time in the last month. Einstein and Wall Street, you'd think I know it, but I don't. I'm out of here. That's all I got to say about that.